Hey everyone, I'll quickly go through my DCF now, and if you didn't catch my first video, in that one I do go over my thesis on Nvidia, which I think will help explain a lot of the assumptions that I actually make in this model. First things first, I get a valuation between 400 and 700 billion for Nvidia, depending on which WACC and perpetuity growth factor you actually layer in. I've held almost all things constant to their Q1 25 results, except for revenue growth. So I'm not messing with margins or anything like that. So let me caveat this. I think Nvidia stock will actually do very well in the next 2 to 3 years, and I think there is upside from its current price in the short term. I believe they're going to continue to grow revenue at 50% plus year over year for the next couple of years. And I think the market could end up actually pricing this growth factor in for a lot longer than I think it can be sustained, which could result in Nvidia becoming the world's most valuable company. I truly think that that could happen for a period of time, but I don't think it'll be sustained longer term. So now let's jump into my model. High level, I have revenue growing from 2024 year end of 61 billion all the way up to 190 billion in 2027 before we see them revert back to around 70 billion in a decade from now. I've used the current splits to calculate an estimated data center revenue, which peaks at 170 billion in my model and then reverts back to about 20% of that all-time high, which is about 40 billion in 2031. I have other revenues growing modestly around 6% as we get to 2031 and leveling off at around 30 billion all in, compared to about 13 billion today. In my part 1 video, I talked about my thesis, but I believe revenue is going to actually grow pretty crazy over the next 2 to 3 years on the back of large cloud providers building out their infrastructure. It's kind of like building a house. Once the infrastructure is in place, there will be a significant pullback in investments, and thus impacting revenue of Nvidia. The house is built, now we maintain it. It's kind of how I think through Nvidia's revenue. This pullback, I believe, will happen pretty quickly. You can see it in my model. I have it modeled with a 10%, then a 20%, then a few years of 30% pullbacks. And I think it's going to be a pretty quick pullback. Once the big cloud providers have kind of built out their infrastructure, I expect sharp declines in revenue. They will be searching for profitability, and they will stop investing in their networks and be cutting their spend. I explained this in my other video as well when I discuss my high-level thoughts. My ending revenue of roughly 70 billion is based on data center revenue being a similar makeup of total revenue as it is in 2023 at around 60%. And with it being around 20% of the all-time high data center revenue, I calculate it at 170 billion. This would be sustained roughly 40 billion in data center revenues. That would be the maintenance cost. I anticipate these large cloud providers would need to continue to upgrade and replace parts of their infrastructure as needed, but a far cry from where the revenue will peak at around 170 billion for data centers. So overall, I think 500 billion or about 205 per share pre-split is a pretty fair valuation for Nvidia. If you ever watched my other videos, you know I don't tend to take a lot of bull cases, but tend to stay more conservative. I do this for a few reasons, but the main one is you need to kind of build in, a margin of safety, or whatever you want to call it. If we take the optimistic upside case, plug it into our valuation, we can definitely justify Nvidia's current valuation today, but everything has to go absolutely right for that scenario to play. If I take a little bit more of a conservative approach, and I do end up finding a company is fairly valued, then I could, potentially enter a position there, and anything positive that happens would benefit my position, and that's sort of my margin of safety in a sense. So I think Nvidia is going to look a lot like Cisco did back in the late 90s and early 2000s when their net was being built out. Everyone thought, the levels of growth would be sustained and what Cisco was experiencing would continue forever, and that catapulted them to being the most valuable company in the world at the time. They've never quite reached those heights again, and it's been 25 years. And I don't think it's going to be different for Nvidia, but who knows, maybe this time it will be. Maybe they can sustain these levels of growth. Anyways, that's all I had for today. Let me know your thoughts and opinions below. If you disagree, let me know as well. I think Nvidia is going to be a fun one to watch over the coming years, and who knows, if the AI demand actually continues on an exponential trend, then this might be one of the biggest misses I've ever had, but I'll keep my expectations tempered for now, and thanks again for watching.